Hi, I'm Shalini and welcome to the Market Note. So, tomorrow we have the Reserve Bank of New Zealand meeting for their May rate decision meeting, and the market is widely expecting a rate cut of 25 basis points, which is 0.25%. But in the next few minutes, I'm going to show you why I think the tone of the cut is more important than the cut itself. So let's take a look at what that could mean for the New Zealand dollar pairs. So just a quick backdrop first on the Q1 economic indicators that have come out before this meeting. So GDP surprised to the upside at 0.7% last quarter. Inflation is at 2.5% year on year, which is well inside the RBNZ's 1 to 3% rate band. And in terms of the labor market, jobs are steady, but wage growth is cooling slightly. Regardless, it's nothing of too much of a concern as yet. And the bottom line is the economy, yes, it's soft, but it's not weak. So, and with a cut already priced in, the question is, will we get a hawkish cut or will the RBNZ lean more dovish? There are three scenarios for this. So scenario one, we get a hawkish cut. So we get the 25 basis points cut plus we get a hawkish tilt in terms of, the Reserve Bank on Australia saying that they will be data dependent. That could lead to the market and taking it as a pause signal for the July meeting, and this will lead to the New Zealand dollar popping up. Scenario two would be if the RBNZ gives us a more dovish tone, so they give us the 25 basis point cut, plus they hint of more easing to come for the rest of the year, we will see the New Zealand dollar soften. And the last scenario, which is very unlikely, but this is Forex, this is trading, anything can happen. We could get a surprise 50 basis point cut if, the Reserve Bank of New Zealand thinks that they want to get ahead of the current trade tensions that are happening in the world. So if this really does happen, then the New Zealand dollar is going to drop very hard and we are going to get a risk-off bid that will hit the markets. So let's take a look at the New Zealand US dollar 3-day chart in terms of the technical levels that we're looking at based on what's going to happen tomorrow. So this is the New Zealand US dollar 3-day chart. I like to use the weekly or the 3-day chart to have a bigger picture of the macro view of where price is actually. So let's take a look on where we are at for New Zealand US dollar. So currently we're holding the mid-range support at 0.5877. If we get a hawkish tone, then I am looking for a break towards something like this, a break towards the 0.6378 highs. And if we get a dovish lean, then what I'm looking at is I would expect a price to break the support it's holding now and make a run towards the 0.5570 support that it is. So basically a hawkish tone, New Zealand dollar up, a dovish tone, New Zealand dollar down, and it's right smack in the middle right now, consolidating, which is also the reaction of both retail and speculators because they are basically flat. So any surprise could fuel a swift repricing either way. We'll just have to keep an eye on what goes on tomorrow, especially if you trade the New Zealand dollar. So I'm just going to wrap up with my base case, my view. I do think that we will get the 25 basis point cut, but I do think that it will come with a slightly hawkish lean. So that means July is left data dependent. And what will be important to watch would be the language on inflation risk and the updated interest rate track, or rather the overnight cash rate, OCR, that's the terminology that the Reserve Bank of New Zealand uses. So yeah, let's see how it goes. And remember to stay safe in your trading. So thanks for watching. You can read the full write-up on Substack. I am going to put it below. And please do follow me on Twitter as well for real-time charts. So subscribe for fast focused macro insights twice a week if you do want to follow me on this journey. So see you again on Thursday after the decision. Take care.